Okay.
Which one was beautiful?
Adelti, can you put off your camera?
Oh, good evening, please. Can you guys hear me?
Can hear you, sir.
Good evening, sir.
Good evening. Oh, people not happy to see me. People don't want to answer me.
Good evening, sir. You're welcome. We're happy to see you, sir. God bless you, sir. Amen.
This woman. Yeah, here again. Anyways, with the way I'm, how would I start? How would I say my grammar? With the way I'm, although all of us are sacrificing a lot, yeah. Both people that are writing and being I'm lecturing and other lecturers, I know we are sacrificing a lot. But you can hear it in my voice how tired I actually am. But from the how would I say it? Some of us are putting a lot, and a lot of things are going on behind the scene just for this to happen. Let me just give you a small scenario of what just happened today. So apparently I was on the road, like around that after say after 5 to 6 ish. So I was on the road. Then it just came to my head, and I'm like, oh, okay, your Wednesday classes has not been happening since. So I just called Mr. The man that takes your Wednesday class. So when I now called him, Mr. Gundingo, sorry, you skipped my head. So Gundingo, so I just called him. The alpha, so what's happening? So it was like, the class will not hold today. That he has some deliverables in office. And that was around after 5. I was exhausted from the old running around today. I was very exhausted. So in my head, I'm like, come on, people will not just do the class, so there's nothing I can do about that. Because I wanted to see if I could fill it. On getting home, which is after 6, then I started preparing my food for iftar now. So I was doing that, and I scroll to the classes. Then I saw how long you guys have done Wednesday class. And I noticed that if things actually continues like that, it's going to be very difficult for us to actually complete the syllabus. So what I did, after 6 to 7, around 7, the food is done. I had to eat. So now I'm actually supposed to, by this time, I'm supposed to be resting from the whole running around of today. I'm supposed to like be not even resting, sleep better sleep, because I am exhausted. So I'm supposed to sleep better sleep. But I decided that because normally I'm supposed to sleep and wake up like 30 minutes, 1 hour, 2 hours later. Then because I have some deliverables also tomorrow. So I'm like, okay, so that's what I'm supposed to do. But now that deliverables is going to be in early in the morning that I have to round it up. Say maybe 4 or 5 till like in the morning. So like what I'm saying is my plans have to change because I have to be here. Why am I saying this? I'm saying this because I'm not saying this so that anybody will clap for me or you say I'm sacrificing. No, that's not what I'm saying. What I'm saying this is we are putting a lot into this. The only thing you need to do, only one thing, read and pass. That is the only thing you need to do. So even I'm not saying give me 1 naira. Don't give me any money. What I'm saying is read, study questions, and pass your exam. That is the only thing that can commensurate or complement or compensate all these things, all these sufferings. Like this, one part of my head, they pay me. The other, and only one half of my head, they work like this. Only the left side. That right side, they don't shut down till tomorrow. Only the left side like this. Now I'm the work. So people will manage the left side like that. Anyway, so what I'm saying is just try as much as possible to read your book and pass. Read your book and pass. Like I don't care if you don't pass the main, but you must pass SFM, whether you like it or not. Someone should me complete that proverb. Can you go there? Don't forget. It's just something around that line. So what it means, thank you. So what it means is if you are not tired, I'm not tired. So just try as much as possible to do. Please, I will not stay very long today. So my plan is to solve. I was getting a lot of text. Somebody even called me about the ARR question, the accounting rate of return. So I actually plan to solve it after the class. I was actually very tired on that last week Monday also. I think during the week, I think it was on Tuesday, while I was studying. Me if I still read. The people are reading in the same way myself I'm reading. So reading no they finish. That's the joy about I can. You will not stop. The journey does not end. When I qualified, the next year I had to write CIS. So I was good in also. This year, only God knows what I want to write. Only God. It's God that knows for now. But obviously, I'm still studying. Yesterday, I was reading CR. Was CR I was reading as a group accountant, the OLEX. So what I'm saying is, so yesterday when I was studying, and I noticed the question, and I had to solve the question again. Then I noticed there was one mistake with me. That's why the thing was not working. I just noticed the mistake that was happening. So I decided that since people were requesting for it, so I actually decided to solve the question again, the error question again, then correct the error that we made. Then I plan to solve that number one question. Please, I'm not going to do a recap. Please, if you want a recap, please, if you're not in my last class, please watch that video on introduction to investment appraisal. Please, that's the background of the video. That's the background of the class. If you watch that video, anything we are going to do here today will not. If you're in that class and you did not sleep off, because I think we finished that class very late, and you did not sleep off, I'm sure everything we'll do here today will not be strange to you. So I plan to actually do one question. Also in the what's the name now? Let's do one question, the first question, that one that we're trying to do. So I'll do that. Then if time permits us, I might do another question. But if I don't do that other question, I would give it to you as assignment. I'll give it to you as assignment. So that's what I plan to do here today. So anyways, how far are you guys in cost of capital? John, how far are you guys in cost of capital? John. About this smoking book. Please, 1 minute, please. Yeah, how far are you guys in cost of capital? Damn long.
So we had one cost of capital.
Huh?
We only had one class.
You only had one class on cost of capital.
Yes, sir.
Oh, wow. So the other question, most of the other questions have something to do with cost of capital. Most of the other question has something to do with cost of capital. So what I will do is, for the cost of capital part, I'll most likely skip it. Because although the way I can always set it is they'll give you information related to. Please hold on. Yeah, I should lock the gate. Okay, that gate was making noise. So I wanted them to finish. So what I'm saying is the way I can use to set it. So they'll give information relating to investment appraisal, also information relating to what's the name now? Cost of capital. So the first step you do is you use those information to determine the cost of capital, which is the WACC, the weighted average cost of capital. So after you determine the weighted average cost of capital, you now use that to discount the investment. We are using a discount factor now. To now use that to discount the investment appraisal. So, but for now that you guys have not gone far in cost of capital, I'll most likely skip some part. Although what I will do, because I'm a nice person, in those questions, although I'll just give you the cost of capital, but I will make some explanations to you also, so that when you get there, you guys can have a brighter view of what the guy will be talking about, or what Mr. Ogundiran will be talking about when he's explaining cost of capital to you. But I cannot be solving. If you guys are done cost of capital now, good. I would have just be solving those questions. I will be solving the cost of capital questions together, assuming that you guys knew it, you guys know it. But now that you don't know it, if I start solving, it's going to be a whole lot of grammar, because you guys have not even gone far. If you guys had gone far now, I could have still pick you up from there. But you guys have not even done anything. So it might be a little problem. But let's see how far we'll go. Let's see how far we can go. So let's start from the please, like I said earlier, if you were not in my last class, please watch the video on YouTube so that you would see what I'm saying, so that you would see the basics of the investment appraisal. Please, before I get started, do you have any question or do you have anything to say to me?
So I want to say something. I'm just saying that you shouldn't skip the cost of capital part. You can actually just do it together.
There's no doing it together when you don't know it now. I'm doing it alone.
Some people might have seen it or
No, you know, I'm sure you have not seen it, but let's see the way it goes, Sha. That's why I said let's see the way it goes. Cost of capital alone is a whole lot. Like
yes.
it's going to slow down our investment appraisal. So you would have met, and that was why I took my time to do some few topics. So that's why because I was one that shared the topics to all the lecturers. So that's why we did it that way. That's how we've always been doing it. I always take my 2 or 3 topics, 4 topics, 4 weeks first before them. So that I always assume that before I get here, they would have done cost of capital to a good extent before I now pick it up from here. Now, even last diet, I had to send the voice note. I look for somebody to help me send the voice note back. Maybe I can send it to you guys because I changed my device. I had to send a voice note. Students were requesting for a voice note on project specific because it's very confusing, very, very confusing. So I had to send about 5-minute voice note on the project specific cost of capital last diet. So like it's a lot. So for us to be doing it together, I'm sure there will be a lot of confusion, but let's see the way it goes regardless. I will definitely explain. So let me see what you guys want to tell me. Luciana Obot, I'm listening to you. Luciana Obot, you want to tell me something? Please, let's be fast.
Hello? Sorry, I didn't know. Good evening, sir.
Good evening, Ma.
This your assignment, the assignment you gave us.
Did I give
Please,
assignments?
yes, you gave us assignment on Monday night now. The Washington something. When I read the question, the capital allowances you gave, should we use that the tax percentage, the same 30%?
No, Ma.
Okay. You did not give us, and it was on reducing balances that you said that we should, but there was no figure there, rather. So I did not understand how to.
Una never jam. You people have not jammed. You say I did not give it. Madam, I just read your comment on the group. I said I should review the question. Now, this question is correct. Very, very correct. You have not jammed. This is SFM, darling. Almighty SFM. That is why it's called SFM. That's why it's the most feared course. Things that are not in the question, you will need it in the solution. You have not seen it. Something that is not in the question, you will need it in the solution. Something that is not appearing there. You know a lot of assumptions that you will make. This is almighty SFM. Madam, the question is correct. Very, very correct. Thank you very much. If you've attended your tax, I'm sure you were like me. If you have attended your tax classes very well, I'm sure that will not be a problem. I used to run away from tax class. All my tax lecturers are born. I used to run away. But if you've attended your tax classes very well, I'm sure that would not be a problem. I don't know how I used to run away from tax class, but over the time, tax has always been my highest score. And I used to run away from those classes. I beg. Excuse, I had 80s, final I had 70 something. Always been my highest score. And I used to run away. Those people used to bore me, I beg.
yeah,
So
if you
let me look for if you will to manage my life. So let me look for what am I looking for now? Our working notes. Our working notes self gone like this. Okay. So let's be quick about it so that we can round up on time. So let's start from the accounting rate of return. So where the mistake was, somebody will shout now. If you shout now, we'll remove you from this call. I know the person that will shout already. So what I noticed from our mistake was the fact that, don't forget what I told you, please. This thing just took me a glance to notice the mistake. And it's because I feel like maybe it's because I knew it before. So that's the level I'm making. I'm trying to make you guys get to just understand the basics. If you understand the basics, you'll not have a problem. So now what I said the last class, or what I'm saying is, if you want to do things related to NPV, IRR, modified internal rate of return, payback period, what do you use?
Cash flow.
You will use cash flow.
Not accounting
profit. You will use cash flow. You will use cash flow, no accounting profit. So if they've given you profit, they now give you depreciation. What do?
You add up.
You add back.
Yeah.
You add back. Thank you very much. Now, but for the
Back.
other
We
ones,
add back.
yes, but for the other ones like ARR particularly, accounting rate of return, you use what? You use profit. Use accounting profit, not cash flow. You use what? Use accounting profit, not cash flow. So what I just noticed from this example, because like when I saw this question, when I saw this thing, first thing I asked myself was, what were we trying to do here? Maybe because I was very tired. Like, what were we trying to determine here? It did
That's
not
what
make
I
sense.
did. Oh, that's what I
So I'm
did.
like, no shout. I know you're going to shout. So I'm like, what are we actually trying to determine here? Because this does not make sense.
Oh.
Do you understand? Looking at this from here, it does not make sense. There's nothing we are trying to determine. If we had used this figure, there was somebody that sent a question to me. I've forgotten the person's name. God of mercy. I'm trying to remember the question. Chem. Not good for you to be full. This question was just yesterday. But if the woman is, I think, in Miss Adiola, I had to send her a voice note. She made a very terrible mistake. Not a terrible mistake, but the mistake she made has allowed her to set another question for herself. Like she was trying to solve. I think it was the same question also. I think it was the same Washington question that she was trying to lay her hands on. Then part of the solution, okay, yes, I think it was the sales part. Yes, I think it was the sales part. Listen to what I'm trying to say. The mistake could have been from anybody. The sales part, let me show you what she did so that you guys can know how deep SFM is. See what she did. So this is this question. Then they told you in the question that they are giving you the selling price of this. See this. Oh, am I sharing my screen? Oh, Chem.
No,
Sorry.
sir. I can't see your
No.
screen.
Sorry. Oh. People know I actually used to check these things you sent to me, and I used to know them. It's just that I'm looking for money. That is why I used to forget sometimes, but I still used to. So see what I'm trying to say. Okay, see what she did though. In the question already told us, this is the old Washington question. The question already told us selling price increased by 5%. Abi? In the question, they still now give us general inflation, which is, I think, about 10%, something like that. I cannot remember what the general inflation is. Then, see now, what she's now saying is that she's not saying that, but looking at this table, in year 1, sales was 2,000. In year 2, 2,200. Year 3, 1,600. Year 4, 1,500. So what she now did in her solution, she now said in her mind, no, that are evil mind, not church mind, though. She now used that evil mind and now said that, or assumed that these figures, examiner has inflated it for you already. Because she was like, I'm sure in her mind, she was like, okay, as this is 2,000, this is 2,200, this is 1,600. The figures, since the figures are not the same, maybe it meant the examiner has inflated it for them. So she was not confused on what to now do with this selling price inflation again. So what me and now told her is, you see that assumption, that little assumption that she made is another question entirely. She has left this whole picture. She has created another 3D for herself. So she's in her own zone, solving questions that nobody asked her. Are you following me? She's solving questions that nobody asked her. She will now solve finish, then come out and say, I have killed Icon. I lie you. So she has not killed anybody. They have injured her. So what I'm saying is you need to be very, very careful of what you are doing. Very, very careful. Anything you are solving, any question that is too simple, look at it twice. Look at it 3 times. Anything you are solving normally, look at it twice. Any question that looks too simple, look at it 3 times. Are you listening to me? Any question, read your question like 3, 4, 5 times. Try to understand the basics. Before you treat any line item, understand it like twice or 3 times. Make sure you understand it very well. So look at this question that we're solving. Whatever we're doing here, it was absolute rubbish. We're just creating questions for ourselves. Because the only thing we need to use is our profits now and see it here. And we don't even need depreciation for it. Because what this is saying is this is our, they even wrote it back that profit before depreciation, which means this is our accounting profits. If this question, listen to me. If this question had been, if this particular one had been profit after depreciation, another different ball game. I don't know if you guys are feeling me. This is profit before depreciation. That is accounting profit. That is what we use for accounting rate of return. Accounting profit. Accounting profit does not include depreciation. Accounting profit does not what? It does not include depreciation. So this is our profit before depreciation. So this is this. So if this question had been profit after depreciation, we can go and add back. We can go add back to get our profits. But what I'm saying is what we need for accounting rate of return is profit before depreciation, which they've given to us bagada. So we don't even need to do all these things. We just set question for ourselves. When I looked at them, I'm like, oh, Shile, what were you trying to do here? What were you just trying to do? So that's the first thing I said to myself, Abba now. So anybody can make mistake regardless. So this is what we need to do. So very simple. What you will just do now is, so let's solve now, Abby.
Yes.
Please, are we together? Please, are we together, Abby? I'm alone.
We are together.
We are with you.
So now, so the next thing you just do, now the question is actually very, very simple. So the next thing you do, since we've calculated all we need to calculate, so let's just come here. Let's just do our ARR. So you come here. Sorry. I don't even need to put this depreciation issue here because I don't need depreciation for anything. So you now come here, say your ARR. What is this? Okay, these are our average investments for these are average for project. Okay, let's do average investment for project B2 like that. Project B. So what's our initial outlay for project B?
120.
So you say 120,000
Plus 12.
plus 12,000.
Over 2.
So what's that?
66.
66,000. Good. So let's go and calculate what's next now. Our estimated average investment. Abi?
Profits.
So let's come here now. So you now say, so let me delete all this. So you now say estimated
Annual profits.
Okay, so estimated annual profit, average annual profit, estimated average annual profit. Easy. So for this estimated annual profit, our profit, see the God almost, why did I delete that table?
Please, for project B is 54,000, not 66,000, please.
142.
54,000.
Are you sure, madam?
It's 66, sir.
It's 66.
Okay.
Is it
plus?
66.
Is it plus or minus, please?
It's plus.
Plus
Okay,
divided by 2.
thank you.
Let me now see estimated average annual profit, annual profits. Oh, yeah. So you now say so this is going to be what? So the formula for, let me call it A, which grammar if you call them now? Let me call it AAP. AAP is equals to, you see the way I'm writing formulas, you see the way my work is, somebody submitted one assignment to me. The woman is in this class, well done. The assignment was so clean, I say, oh, Jesus is Lord. I wish you. Me like this, if I start solving everywhere, jaga. But the only thing is my workings used to be it's only my workings that used to be very rough at the back. Whenever I bring them to my book, it's always very smooth. And I will now break it down. See what do I'm breaking it down? Average annual profit. This is it. Estimated average. So this is what now don't start. Who is that? Miss Folashade, please now. Anyways, what was I doing? So you see total profit over what? Let me see. Number of years. So let's now say for project A. So what are our profits for project A?
60,000.
So for you to have gotten 60,000, I'm sure you have said 58,000 minus 2,000
plus
plus
4,000.
4,000. Those are our profit that were given to us in the question. Right, by many years?
3 years.
Very, very 3 years. Can somebody tell me can somebody tell me why would you not divide this by 3?
Because it's
Which one?
average that we're looking for.
Thank you very much. This one is average you are looking for. Is different from this. So 66,000. So what's my project A?
Stay.
20,000.
20,000. So let's do the same thing for project B, please. So the project B, what are our profits, please? Yeah. The laptop is low. That's a
Profit is 40,000
40,000.
divided by 3.
Just like give me the words. I'll be the figures one by one.
36,000
36,000
minus 4,000
minus 4,000
plus 8,000.
plus 8,000, I mean.
Yes.
So what did you say? That's 40,000.
Yes.
So let's now determine our accounting rate of return. So you say ARR.
Hello, sir.
ARR equals
Project B cannot be.
Please, I'll take your question. Please hold on. Okay.
So that project B is not correct.
What's the answer?
13,333.33.
That's when you divide it by 3.
13,000.
333.33.
So you come here, then you say so what is so you come here. So what's our estimated annual profit? That's 20,000. Abi,
Yes.
our estimated average investment for project A.
107.
107,000. 107. So what's my
19%.
90?
19%.
18.7, approximately 19%.
Let me use 2 decimal, please. 2.7%. So my project B, uncle.
20.2%.
Give me these figures. You are just writing it in your notes. I need to give people that will use it. A lot of thousands of people will use it.
66,000.
66,000 over.
Sorry. It's 13,333. 13,333 over 16,000. 60,000.
Over 60. Over 60,000. How much is that?
20.2%.
20.2%.
20.
So that thing is 66,000, not 60.
50.
66,000.
66,000.
6. Yeah.
No, no vex. I never chop now. 66,000.
Make I bring food.
Now allow me chop. Anyways, so that's our answer. Anybody get it?
So I almost got it though.
Almost. It can be almost.
I did not divide my profits.
Yeah, I got it. Too.
If you actually got it correct, well done to you. If you didn't, just notice your mistake. We are all here to learn. Anyways, let's go to what we have to do today. Please, I'm not going to explain all these things again. No. The only time you people is working capital. And I want us to, how would I say it? I want us to actually put a reasonable figure to it. That's why people will understand what I'm saying. But the whole process or the whole step of, or the whole, what would I say? The whole assumption of working capital. This is what it means. I told you that it has 3 assumptions. The first one is what?
That's
Well done.
Introduced at the beginning of
it
the
is
year.
not introduced at the beginning
It is introduced at the beginning of the year.
of the year.
Recouped at the end of the year.
It's
At the
used
beginning of the year.
and it's not taxable. It is not
You must not
taxable.
tax your working capital.
And it is not taxable. Thank you. So what it means is it is recouped at the beginning. It is introduced at the beginning of the year. It is recouped at the end of the year, and it is not taxable.
Should be considered.
First, let me tell you what it is introduced at the beginning of the year. What it means. I told you the old. See, listen to me. These things are where students fail. You see, when they say for this investment appraisal, there's a general assumption, and the general assumption is that you should take all cash flow. Put this one in your left hand. Don't use it to eat. You should take all cash flows to happen at the end of the year. What I'm saying is, if you see your sales year one, assume that sales is happening at the end of the year. It makes sense now. It does not make sense. If you sell something, let's say you want to give somebody your data. Maybe you want to give a data analyst your data. You give person data for year one, year two, year three. Is it data at the beginning of the year you give him? No, naturally, at the end of the year that has incorporated all the sales you've made. For your variable cost, has incorporated all the money you've spent. So it's always at the end of the year. So what I'm saying is, any cash flow that is given to you, assume that it is given to you at the end of the year. At the end of the year. So if they give you, let me ask you guys a question. Let me see how smart you guys are. But that thing I've said. So they now say, okay, something, maybe sales is happening at the beginning of year two. At the beginning of year two, where will you record it?
At the end of
The end of year one. At the end of year
At
one.
the end of year one. At the end of year one. So listen. So if they tell you that anything is introduced at the beginning, are you listening? This is where they used to fail you people. Something is introduced at the beginning of year two. Don't go and put it in year two. Carry it and carry it to year one. Because what it means is, if it's at the beginning of year two, obviously it's at the closing of year one. An assumption of general MPV is that all cash flows happen at the end of the year. Happens at the end of the year. Good. So listen, for working capital, let's put figures to it. I want to that thing that my friend taught me. I've looked at it, but I feel like it would confuse you guys a little. Let's just put figures to it. Then you guys will understand how working capital works. And I've even looked for a simpler example, a simpler way to make you guys understand it. So let's put figures to it. So before I get started, based on all this explanation I explained it in the previous class. Is there any question? Or do you want to tell me anything? We are. Bime. It's Juliet. Iko Mola. I love that name. Iko Mola. Any question? Can I fire Benjamin Chuku? Talk to me, please.
Yeah, good evening, sir. Good evening, colleagues. Thank you very much, sir. Please, sir, my question is about this accounting rates of return. That's from the question. We were giving figures for depreciation. I don't know, is it that the figures there were given to kind of confuse us, or there's a point at which we are to make use of the figures in depreciation? Because from what you explained, you said we should ignore depreciation, we should only work with the accounting profits.
Did you solve? You know this question was an assignment. Did you solve the assignment?
No, I didn't attend the class. Okay, I
I feel
was
like that's
having
why
issue with my network.
Okay, I think that's why
that
you
day.
are majorly that's why we are majorly having this issue. See, that's why I don't like to miss class. You know the bad part why this class, why the missing is annoying. I did not solve it in class. Did I? I just asked, I just explained, then I asked you guys for your solution. But I just explained, but I did not particularly solve it. It's MPV. I cannot come and be solving MPV in class. MPV is something you would have done excuse. So I did not solve it. That's why but I explained. But that depreciation is not totally ignored. In the question, asks us to calculate MPV, asks us to calculate internal rate of return, modified internal rate of return, payback period, and all those things, they deal with cash flow, not profit. They deal with cash flow, not profit. And profit, before you can get your profit, you would have obviously included depreciation. Before you can get profit, you would have included depreciation. So what we now did was we now calculated that depreciation, then we now added it back. You know, they would have included it now, so we now added it back. They would have subtracted it. Depreciation is an expense now, you'd have deducted it. So we now added it back to get our cash flow. So it was that cash flow we used for our IRR, our MPV. So it's not as if it's totally ignored. So that's what we used for the previous A, B, C, D question. It's just for accounting rate of return because it deals with accounting profit. So that's why we now used that particular one.
All right, okay, thank you very much.
And even for that particular accounting rate of return, the depreciation was still totally ignored because it was expressly stated in the question that what? Profit. That profit. So that is why if they had said it in the question that this your profit is after depreciation, please go and do what? Go and add back that depreciation because you need accounting profit. You need what? You need accounting profit. Oh yeah. So that is that for that. Anyways, very well. So there's no other question with regarding anything I've said previously based on our MPV question. Please, permission to fire on, please.
Permission granted.
Are you people sleeping? You people should answer me. Can I continue?
Yes.
Fire
sir.
on, sir.
You can continue, sir.
Yes, sir.
Thank you. Okay, so let's move on. Please, somebody will question for me. You can hear my voice for the help. Yes. with all these things I've gone through today, and I want to see the read question for me. I beg. One sexy woman, one sexy voice. Please help me. There's fasting.
Wait, man.
So you're fasting, no. You're fasting, no.
Now, which question you supposed to read?
I don't break my fast. No worry. The first one, Washington, I do think they call themselves.
Washington PLC.
I said sexy voice now. Oh yeah. Oh yeah.
Yeah, you say sexy, but I don't want the game.
Oh yeah, now no vex.
I don't want.
No vex.
God, amigo.
Oh yeah, now she don't vex now. I'm out to not put me in trouble. Yeah, madam, assured ways, please help us, please. Thank you.
Not to commercialize an innovation. Hello.
Can
I go ahead?
You cannot come again.
Can I go ahead?
Read, I'm trying to understand. Continue first.
So Washington PLC is considering a project
And this is a
whether
man
or
or
not
a
to
woman?
commercialize.
Sorry, what is your gender? Gender is very important in this our class. Very, very important. Answer me, Mr. Is it Mr. or Mrs.? This man don't know in gender, beg. Oh yeah, people don't want me to solve this question.
Washington PLC is considering a project,
Thank
whether
you,
or
madam.
not.
No vex, so it's only my left side of my head that is working. So I need good voice that can make me solve this question very well. That's why. Thank you, madam. Oh yeah, at the end. Please listen though. As they are reading the question, we'll be dissecting it, me and you, all of us. So please pay attention. Oh yeah, Mungbo.
Washington PLC is considering a project whether or not to commercialize an innovation muzzle toning device, MTD, that will be used in the treatment of sporting injuries. It is expected that the commercial life of the MTD will be 4 years.
The useful life will be 4 years. Well,
after which technological advances will bring more sophisticated devices to the market, and the sales of MTD fall to virtually zero. 8 million naira has been spent in developing and testing the device over the past year. Initial market research has been conducted at a cost of 2.5 million naira and is due to be paid shortly. Information on future returns from the investment has been forecast to be as follows. All figures assumed to be correct. Selling price inflation rates and fixed cost inflation are expected to be 5% per year, and variable costs inflation is expected to be 4% per year. Fixed costs represent incremental fixed production overheads, which are wholly attributable to the project. The production equipment for the new device would cost 120 million naira, and an additional initial investment of 20 million naira would be needed for working capital. The equipment is expected to be sold at the end of 4 years for 10 million. When the production and sales cease, the average general level of inflation is expected to be 3% per year, and working capital would experience inflation of this level. Capital allowances, tax allowable depreciation on a reducing balance basis could be claimed on the cost of the equipment. Profits tax of 30% per year will be payable 1 year in arrears. A balancing allowance would be claimed in the 4th year of operation. Washington PLC has a real cost of capital of 7.8%. You are required to A. Calculate NPV, IRR, and discounted payback period. B. On the basis of NPV, advise if the project should be considered. C. What are your assumptions on the calculation above? Total 30 marks.
thank you very much, madam. Is your husband you marry? Oh yeah. And you married the husband. Oh no, I
I
don't know
never
what.
marry her.
You never married. I'm good. That means my prayer is very legit. Oh yeah, let me now ask you a question. Okay, I think somebody was raising up their hand. Let me first see if it's a major problem. Okay, there's nobody. Yeah, let me ask you guys a question. Maybe she was reading, you were laughing. Oh yeah, let me ask a question. Let me ask questions. First, what is the useful life of this project?
4 years.
4 years.
Yes.
Thank you very much. What's the inflation of our selling price?
5%. Please, question what, please?
Question what, Bawo?
Illustration
Question 3.
Illustration 3.
Question back.
Okay, thank you.
So you said our selling price inflation and selling price and fixed cost inflation is what?
5%.
5%.
5%
Is
and
it
8% respectively.
is it a relevant cost?
Yes,
Yes,
Why?
it's incremental fixed production.
Is
because
incremental, actually.
it's directly to the project.
Is incremental and it's futuristic. It meets the three things I told you. It meets the 3 criteria I told you. It's futuristic. As you can see, there is year 1, year 2. So, and they're telling you it's a forecast, so it's futuristic. There's a movement. There's movement of cash. There's movement of cash. Which one is the last one? There's a different. Okay, this one does not have to do with differential, anyways, because it's not an opportunity cost, but it has to do with it does not have to do with differential. So, and it's incremental. So it meets that one. Variable cost. What's the inflation for our variable cost?
4%.
4%.
4%.
4%.
What is our initial outlay in this question?
120 million.
120 million. 120 million.
120 million.
Does anybody think otherwise? Good. So I'm taking your word for it. If you like, give me poison. They on hand. Anything you call for me, that's what I will use.
Investment, that is the 20 million. Or I don't know.
So what you are saying now is our initial outlay is 20 million, Abi?
120 million.
No, I'm talking to Miss Luciana. Is that what you are saying?
No, it's 120. It's 120 that's the initial outlay. The
Okay.
20 million is working capital. Sorry, I'm just saying
Okay.
it.
Thank you very much. Do we have scrap value in the question?
Yes.
sir.
Yes.
How much is
10
it?
million.
10 million.
10 million.
10 million.
What year will the scrap value be charged?
At the end of
Year
the 4.
4 years.
Year 4.
4 years.
Actually,
See.
what do I want to ask? Okay, this is the question I want to ask now. This is where the real question is. What is the discount factor we use in this question? What is the discount factor we use to discount?
You have to use
Money COC.
money.
We are using money.
We're going to use money.
Capital.
The selling price will be inflated.
So you use the Fisher equation to get the money.
Now the channel.
We will convert the real cost of capital to monetary cost of capital.
To money cost of capital. Why?
Because there's going to be a trend of inflation in the
Why? Salam Akodi, if you want to talk to me, talk to me. If you don't want to talk to me, please help me with your mic. Oh yeah, why are we converting that real cost of capital?
because of the element of inflation that will occur in the cash flows.
Yeah, so what are we now going to use to convert that?
Please, I don't know the question that we are treating. Please, what page, please?
I don't know the page, ma. Somebody said page 37.
Illustration 3. 39. If you are using laptop, 39.
Exactly.
Okay. So you said we'll convert the oh God of mercy. Sir.
So I don't think we need to convert the cost of capital.
Yeah, thank you. Why?
Because we have a general inflation rate in the question, and the cost of capital we are giving is already real cost of capital.
Okay, so what do you now suggest we do?
We are using the real cost of capital to discount it.
To discount the cash flow.
Yes, sir.
So we use 7.8.
Yes.
Thank you very much. Tax SFM is very sweet. It's very sweet because we always have about 2 or 3, 4, 5 different school of thoughts. Sometimes it's one school. Sometimes it's only one school of thought is the correct one. 3, 4, 5 people can say, say now that's Canada answer. we can have 3, 4, 5 school of thought. Then one can be correct. Sometimes we can have 3, 4 school of thought, and the 4 can actually be correct depending on what you are looking at. But for this particular one, it's only one school of thought we have. And the school of thought we have is that, let me first even give you a trick. That was the same thing I told Mr. Ore. I can people are very, very funny. Whenever you see a question and you see general inflation, know that there's a trap there. I feel like that, you know, I've told you guys, but that's what made me pass SFM comfortably. I was not the best in my class. I told you I don't have the best lecturer. And it was the diet I took 5 at the time. So I don't even have time to do a personal studying. I was just actually focused on studying. But what I did was I did a lot of personal studying because I knew what they were doing in class was not for me. So I was doing a lot of, and I had a guidance. God bless Mr. Puye wherever he is. So I had guidance. I was always disturbing him. He's a guru in SFM. So I was always disturbing. I was always sending him questions. That's why I always look the way people are not sending me questions. If I read overnight, the next morning, that man used to beg me. Like he was literally begging for his life. Allah, I beg now. Like if I should read, you used to pray that I should not read. If I should read like this and I go to Pathfinder, at least on a very, very minimum, I'll send him 5 Pathfinder questions. Then he will tell me that I cannot answer all. I'll answer 2 or 3. I'm okay. Answer the 3 for me. I'm okay. I'll go answer to the rest by myself. So what I'm trying to say is it was one that actually helps. I always send him questions. So what I'm saying is I was not the best, but what actually made me pass SFM and what made me know SFM is I've told you before, I know what is wrong more than what is right. I know that if I do some things and I get some answers, let me give an example. There's something in cost of capital that we call equity beta and asset beta. It's in project specific. I will explain it later. Yes, whenever I do some people don't know this trick today, but on every occasion or on most occasions, your equity beta should be higher than your cost should be higher than your asset beta. So there was one time I was solving a question, I think it was even during an exam or something. Then I got one answer for my equity beta, and it was less than my asset beta. In my mind, I knew I was already wrong. Not because I knew not because I knew what my answer was, but because I knew that anything that could make me get something lesser than my asset beta, it means I'm on the wrong side. So I knew what was wrong more than what was right. So for this particular question now, the moment you see, if I was the moment I say general inflation, I know there's a trap somewhere. It's not for me to now go and look for it. Now, I've explained to you before that on no occasion should you use a real cost of capital to discount a money cost of capital, to discount a money cash flow. Don't use real cost of capital to discount money cash flow. Let me brush your mind a little back. What is money cash flow? What is real cash flow? Money cash flow is a cash flow that has been inflated. Inflated in two ways, either through general inflation or through specific inflation. Listen to me. It can be inflated in two ways, either through general inflation, through specific inflation. Let me still run your mind a little. What is general inflation? What is specific inflation? Specific inflation is the kind of inflation that they give us in this question for selling price. Selling price has increased by 5%. Variable cost has increased by this. Fixed cost has increased by that's specific. It's specific on line item. When they say general inflation, it's still like what they give us in this question. They will just go down and tell you that general inflation is this. But listen to me. Listen to me. They cannot give you the two in one question. Please don't get it wrong. They cannot give you the two. When I mean they cannot give you the two in one question, they cannot tell you to use specific inflation and also tell you to use general inflation. Listen to me. They cannot tell you to use specific inflation and only tell you to use general inflation. There is only way. The only way that the two can come out in a question is like this. And it's coming out like this because they gave you a real cost of capital. So what that is simply telling you to do is a real cost of capital means that that cost of capital has not been inflated. But you, whenever you do your specific inflation, you would have inflated that cash flow. So what it means is, why they are giving you that general inflation, they are simply telling that that cost of capital we gave you, don't use it to discount that cash flow. That is simply what they are telling you. With that general information line, with that general inflation line, don't use that cost of capital to discount that cash flow. Because that cost of capital is a real cost of capital, and you would have used specific inflation to inflate your cash flow. So you cannot now go and use real cost of capital to discount it again. So that general inflation is just for you to use Fisher's theory, Fisherman then, I don't know, Fisher. So you just use Fisher's theory to join the two equations together. So you now get your money cost of capital. So you now use the money cost of capital to discount the money cash flow. So Mr. Salam, the question is the real cost of capital. After inflating, you cannot use a real cost of capital to discount a money cash flow. Look, listen, watch. Let me not break something to you. You know that? Do you know that the way this question is like this, that we've not solved anything? Listen to me. The way the question is now, it is correct. We can discount if we were not calculating anything. If we were not calculating anything, we can use this real cost of capital to discount this cash flow. Yes, now. If we were not calculating any inflation, let me speak. If we just pick all these figures like this, bam. Do all the sales, subtract the variable cost, subtract the fixed cost, put the initial outlay, put the scrap value without putting any inflation, without inflating anything. That is what we would discount with cost of capital with this particular 7.8. But what is that saying? We've not solved anything now. Did we solve anything? We are just buttressing the examiner's point. Because the examiner has told us to inflate. So any moment we put any inflation on it, we cannot use this cost of capital again. We need to now use that Fisher's theory to determine a money cost of capital to inflate it. Please, is it clear?
Yes, sir.
Mr. Salam, are we fine?
Yes, sir.
Thank you. Benjamin, talk to me, please.
Yeah. Sir, please, I just want to be clear. Suppose a question did not give specific inflation rate and rather gives a single rate to inflate all the cash flows that are given, and also a real cost of capital is given. Are we going to also still convert it to money cost of capital since we've already inflated the cash flows?
Yes, sir.
All right, okay.
But that kind of question is very rare because it will be too simple. So you are just picking the same inflation, just inflating everything by 5%. So it will be rare. It will not be in high cash. Or maybe if you write maybe CITN or something, but I don't think it's I will not give you something. But they can. I don't know the way they are moving these days. Nobody understands them anymore. So that's. But if it happens like that, yes, you will still say anything that makes you put any inflation on, even if it's one, anything that makes you inflate a cash flow. It is no more a real cash flow. It becomes a money cash flow. And you can never discount a money cash flow with a real cost of capital. So any kind of inflation you put on it, even if it's 1%, please go and convert it. So if that is fine, what other question do I have to ask? What's our tax?
30%.
What's our 30%? How is it charged?
In arrears.
So it's being charged in arrears. What does it mean? Tax of year one will be charged in
tax. The tax for year one will be taxed.
Tax of year two will be charged in when?
Year three.
Good. Another question I want to ask you. Somebody very brilliant should answer my question. That capital allowance, is the percentage given to us? Yes or yes?
No. I said no. You said yes. So I'm
Madam,
waiting for that.
Madam, no say no. I say yes or
No.
yes. It means it's yes. It's in the question.
Okay.
Anybody? I have 92 students in this class. You cannot tell me you don't know that percentage.
25%.
So nobody, no idea.
30%.
Yeah?
Yes.
25%.
25%.
25% now. 100 divided by 4.
That is 25%. 100 divided by 4.
How will you say they did not give us? How will you say they did not give us? Expressly written in the question. It's not everything they will be writing for you now. You are professional. You are not a skills or foundation student. Tax. You don't do tax. All those things in taxation, they don't even used to give you all those capital allowance rates. You just use number of years. That 4 is the number of years. If it was 5, you do 100 divided by 5.
That's true. That's true, sir.
If it was 2 years, you do 100 divided by 2. For this one, is 4 years, 100 divided by 4. You have your 25%. But I'm saying they did not give us. Yeah, 25. Sir? What do you say, ma'am?
Sorry, I wanted to the 100. I understand the 100 divided by the date, but I wasn't thinking in that direction because
No, it happens now. It happens definitely. I understand. It's your first time now, so I was not expecting any magic. It's understandable. No. Anyways, so that is that. For that, what other question do I want to? I think we have. That's basically all that is left. So we are finished now. Yeah, question 2. What's the next question? Yet alone here, that one is gone. Abi, we have solved it.
Baba done PLC.
We should move on, Abi.
No, sir. We only analyze it. Please.
No, sir.
No, we only
Yes,
analyze
sir.
this. We've not solved it. So.
Analysis
We've
have
not.
not solved. Analysis have not solved now. You were giving me the figures and what I needed now.
It will not give us 30 marks if in the exam situation.
So if you solve it, people are not nice. People are not nice. You can also say, Mr. Ola, don't worry, Joe. We'll go and try it. You already know it. People cannot do that, man. No, Allah. Who wants to ask me a question? Mr. Chimobi, please ask me before I start. Immediately I start, I'm not taking questions again. Oh, yeah. Oh, yeah. Chimobi, please, your question. I should move to the next question, Abi. Thank you, Jare, madam. Chimobi, please, your question. Oh, yeah. I cannot hear you. Mr. Shegun, please, your question.
So we are given the rate of interest that we are given, rate of inflation that we are given is different for selling price, and inflation that we are given is different for selling.
Yes, they are.
To this year that we're going to calculate will be different.
The what?
The cost of capital will be different. The cost of capital will be different.
How would they be different? It cannot be different now. They will not be different. Don't worry. When we get there, you see it. They will not be different. Everything is their information is relating to that project now. After we've calculated our everything, so we use the same cost. It will not be different. Don't worry. When we get there, you see. Yeah, Mr. Kennedy, yeah. These questions are getting too much. My laptop is low. See it at 4%. Can only last 1 hour. Oh yeah. Mr. Kennedy, yeah.
Hello, sir.
Okay. So I'll just move on.
Hello, sir. Hello,
I can
sir.
hear you. I can hear you.
For the reducing balance method, like I have to use for the depreciation,
I thought when we were doing the depreciation stuff in our FR, the formula for calculating the rate for reducing balance method is different from that of the straight line method.
Yes, it is.
Yeah, because like you said, we are going to calculate the rates here. You said we are going to divide 100 by the number of years, which is not so for reducing balance method.
No, now 100 divided by 4 that you've done is not.
Yes,
That's
sir.
not. It's not to determine your depreciation. That is just to determine percentage. Once if you charge 20%
That
on
is what I'm
1,000.
saying. For determination of rates during GFR or DFR or depreciation of the rates for reducing balance, that is when we are going to use 1 minus root number of year square value divided by the cost of the asset. That is what we always use for reducing balance method. We want to calculate the rates.
Leave that one. Learn this one because I don't think I
Okay,
really
sir.
understand where you are trying to like go, and I don't really have time to actually listen very well. Sorry, but like I don't understand the whole scenario. But what I'm saying is, if you want to do this reducing balance, do it like this. If the question is straight line, this one does not. This one, if it's straight line, I don't know what you're trying to say. But for this particular SFM, if it's straight line that the question asks you to use, just pick the cost now. The cost, which is the initial outlay. Just take the initial outlay minus your residual value divided by the number of years. You get it. So for that one, you most likely get 1. You get the same value for all the years, most likely for straight line. You get the same value for all the years, but reducing balance, the values differ. So yeah, let's continue. Miss Chika, ask me as I'm continuing like that. Chika, you want to ask me something? Or I'll continue like
Hello,
that.
thank you, sir. Please, just like they gave us different sales price, are we inflating that particular sales price with the inflation rate only? Just like in year 1, we have 2,000. In year 2, we have 2,200.
Madam, don't
And the
worry now.
rest.
We are solving it. We
Oh, I
are
didn't
solving
know.
it.
Sorry, please. I didn't know, please. Thank you.
That we are solving.
I didn't know we are solving. Sorry, please.
We
Thank you.
are solving. I cannot leave you to it. Even I'm not that weak. I'm a nice person. I will solve it. Don't worry.
So you're not a nice person.
Because I said your voice is not sexy.
But sir, you're not a nice person. Sincerely speaking, they will send results to you. You can't revert back because it encourages one to continue doing more questions and then send to you if we are confused a bit. Please, I pray that you just at least try to answer us. Sometimes when we submit some assignments, at least if there is any error, you can at least tell us before the next class. So that
I will not comment on that. I refuse to say anything on that. Please, let's continue. So what's the first thing we'll do? So let's oh God, I must. So let me see workings one. Let's start with our sales. So let's see 4 years, selling price, inflation, the incremental total sales. So we can see maybe 5. Let me use 5 by 5. Say 5 by 5. So the first one is let's say year. So let's say we have a year. So we have year 1, year 2, year 3, year 4. Then we have selling price. Of selling price. Excuse me, what's selling price for you?
2,000.
2,000.
22. 16. 15.
So this is our inflation.
Inflation is 5%.
So do we not to inflate?
Yes.
So what's my inflation for so let me just say let me just do it like this to save time. Let me say incremental sales at 5%. Oh yeah, for year one go.
We have 2-1.
2-1.
Yeah, 2001. Year two.
2-3-10.
2 what?
2-3-10.
2-3-10. That is 2,310.
1,680.
1,680.
People are doing it wrong now. What are you doing? Are you using 2,000 for everything?
No.
For
No, for year 3.
For year
Year
2.
3 is 1,680.
So what you are doing is what you did is 16 multiplied by 1.05 raised power 3. Was that what you did?
5.
No, raised power 5.
Raised power 5. How?
There's
Where's
no
the 5
reason.
coming from?
Like 1.05 times
1.05 times
1,600.
No, now people said you know how to go.
Year two is 2,426.
2,426 for year 2. That one is wrong. 2,004 to 5.5 for
Hold
year
on,
2.
hold on, please. So let's do it like this. These are things some of your lecturers will not do at centers that you pay. These are things they will not do. So I'm here being bashed for not taking assignments. No wahala. So
No vex, please.
So we are saying 1.05 is to power 1. So this is how you go, please. You multiply by the number of years. Don't just multiply it. So you multiply by the number of years.
Oh.
Or you raise it
Thank
past
you.
the number of years that you use. So you say 3. Then you come here and you say 4. So now let me now do incremental sales here. Is it fine? Some people can do it like this. Some people can say that one is just a long method. Some people can say 0.5% of 2,000, whatever you have added to 2,000. This is what I'm saying. Some people can say 2,000. This one is just a long method. 2,000 multiplied by 5%. Whatever you have added back to 2,000, it will give you that same answer. 5% of 2,000 should be like 100 naira. If you add it to 2,000, it give you 2 more. And this one is easier. 1.05 times 2,000. That give you answer. 1.05 raised power 2 times 2,200. So that is that for that. What was my first? So the first one is 2-1, Abi.
Yes.
One.
Second one.
Yes.
2,425.
Yeah, 3.
1,852.
Yeah, 4.
1,823.
1,823. So this is just our incremental sales. You know that we need to get our total sales now, so that see this thing works. It works. Somebody's unmuted. This thing works. It works 2 ways. You can just calculate your sales per unit. We did all these things in our PMO and our MI. So I will not waste time on. You can do it sales per unit. You do your variable cost per unit, then you get your contribution per unit. Then whenever you get your contribution or whenever you get your contribution per unit, you multiply by the total what's the name? By the total output to get your total contribution. That's why it's not good to skip skills and skip. Okay, you can skip foundation, but it's not good to skip skills because we have done all these things in PM. So what I'm saying is you can do sales selling points per unit, multiply by the subtract from variable cost per unit, you get your contribution per unit. Then you will now put all the output, you multiply it to get your total contribution, not per unit, you get your total contribution. You can do it that way. Or you can do it like this, where you get all your sales per unit. Even inside that sales, you will now multiply it by outputs. So that you get your total sales, you get your total variable cost. Then when you subtract it, you get a total contribution from there, which is the method I'm going to be applying in class. What I'm just saying is you can check another textbook, or you can check some of the lecturers in class on bits per unit. They are correct. It does not mean they are wrong. I'm just telling you this thing so that you not say somebody is teaching you rubbish. So what's our output? Output is the units now, number of
Yes,
units.
2,100.
Eh?
20,000. 70,000.
20,000.
125,000.
So because of space, or because I don't have strength, I will be raising this thing up to the power of thousand. Do you understand what I'm doing? So this one will not be 20. This one will be what?
70.
70. This one will be what?
125.
125. Last one.
20.
20. So what's my total sales?
42,000.
So you come here and you say total sales. So what's total sales?
42,000.
42,000.
169,820.
169,820. Next one.
231,500.
231,500.
36,460.
Thank you very much, madam. 36,460. So let me underline this so that we know what we got. So these are our sales. On to the next. Let's do variable cost. Yeah, it takes time. It takes time. Like it's actually a lot. Whenever I want to teach investment appraisal like this, I always first cry for like 1 week first. Because it's a lot. Oh yeah. Let me leave it like this and bam. So you come here, you now see 2 variable. Is this one too small? Can you guys see it?
Yes, sir.
Okay. So what's our variable cost?
Our variable cost for the first year is 900.
Just be calling. Don't worry, I'm active. I'm active like a thief.
1,000 for second year. 1,020 naira for the third year. 1,020 naira for the fourth year.
So 30 and 40 are the same thing, Abby?
Yeah. Yes, sir.
So the inflation is it 5%?
It's 4%.
4%. So 1.04. I'm expecting you guys to be doing the incremental like that. So somebody can be doing year 3, somebody is doing year 4, so that is fast. Oh yeah. Yeah, one.
Incremental.
We put in here. Which are you talking about?
Oh, yeah, 936.
936.
Oh, yeah, 1082.
1082.
Oh, yeah, 1147.
93.
Yeah, they're getting more.
1147 for year 3.
1147.
119.
119 what?
3.
90.
So what's our total variable cost?
It's 720 for year 1.
1 minute, please. Total variable cost. Total variable cost. So year 1, you say what?
It's 720.
720.
75, 740.
75, 740.
143, 375.
Have you solved this question before?
No, I'm solving it with you.
143, 375, right?
Yes.
386.
93, 8 what?
860.
860. No, but on to the next. Variable cost. Hey, I've not asked you guys a question. I wanted to ask one question. What was that question I wanted to ask? Oh, that 2.5 that is due to be paid shortly. You adding it, Abi? Is it the question again? And let me know. Is it relevant cost?
It's irrelevant cost.
Why am I?
Because it's a research and development cost.
There being a research and development cost, does that mean it's not really?
It's sunk cost already.
What's the meaning of a sunk cost?
A cost that have already been incurred before the project is being started.
That has conducted for the project.
Okay. Just trying to make sure you guys understand what we are doing. That's why. Yeah, my fixed cost. Please, whenever you get to fixed cost, always watch out. Fixed cost is always okay. When I was in foundation, that's why fixed cost is where I used to miss it. I always have problem with fixed cost. Why? Because I always assume fixed cost is per unit, which is where I started having problem. But like fixed cost is not per. For people that that went to good school, that not go to Nominal U, people like me, I went to Nominal U. People that went to good school, that went to all these sweet names, Rosebud, Rose Kinecon, Chris Kinecon, all those names. People who understand this thing. Fixed cost does not change with level of activity. So what it means is you cannot particularly say fixed cost per unit. No, because it does not change with the level of activity. Variable cost, all of them, they change with level of activity. So what this variable cost is telling you, okay, you spend 900 at 20,000 at the 20,000 units. You spend 1,000 at 70,000 per unit. That's what that is telling you. But fixed cost does not pass. So fixed cost is always in the whole sum. Like it's always in the total. So me, when I was in foundation, what I now used to do is our first fixed cost is about 10,000, I'll be 10 million. I will now still multiply by the unit again. I will now have big number, very, very big. So that I can always have problem until somebody now to explain to me, okay. So for this our fixed cost. Now, what is our fixed cost? What's the grammar in the question?
10 million also.
10 million naira. What did they say in the grammar?
Inflation rates at
fixed cost in current time 10. That's 10 million. Watch out. You see that this way somebody would have failed. Because in the question says 10 million and we are raising up to the power of what?
In millions.
We are not raising up in million now, we are raising up in thousand. But the question is in million. So that means what we have here is what? 10,000.
10,000.
So somebody like this, as in that place, you would have big baggy. So these are the little errors that people make. Total inflation for is it 4%?
5%.
5%.
I'll just copy the one with 5%, JJ. So what's our incremental fixed cost?
10,500.
10,500.
11,025.
11,025.
11,576.
11,576.
12,155.
12,155. So we should multiply by our output, Abi?
No.
No.
Thank you very much. These are fixed costs. Let's do tax savings on capital allowance. Okay, let's do working capital. Let's do working capital first.
Let's do
working capital. So you come here, you see working capital. Let me give you the first gist to working capital. So whenever you are doing for working capital, always assume so working capital is one of the most difficult. So listen to me very well. So whenever you are doing working capital, always leave an extra space for another year. Sometimes it happens, sometimes it does not happen. So this is for you. So you leave a space for year 5. So now let's continue. So this is what's the grammar on our working capital?
An additional investment of 20 million will be needed for working capital.
So don't forget what I told you. What's if in our accounting they told us that working capital is what? Current assets. Your current asset equals to your current asset must equal to your current liabilities, Abi. So now what for working capital, what working capital simply is saying is okay, I'm doing a business. I give you an example yesterday now. I told you that okay, for vintage accounting solutions for us now, some of the costs that we use as working capital is costs that we pay our graphics designer, costs that we use to buy softwares, costs that we maybe cost of salaries and wages. So all those costs adding together is working capital. That is what we are using to run the company. So at the beginning of the year, we would have looked at it. This year, I think our working capital was about 500 or 600. So what I'm saying, at the beginning of the year, I've looked at the working capital and say, okay, so you drop the working capital at the beginning of the year. Private to share, if you've worked, at the end of the year, you will recoup your 600,000 back. Next year, you have 600,000 in your pocket now. So next year now, the working capital you need might be how much? It might be 200,000, no more 600,000. So out of that 600,000, how much will you drop now? How much will you drop? People don't understand.
100.
The next year now, no, next year you need 200. So you drop 200, you have 400. So it's only the movement between them that you will just be recording. You'll be recording. That's how working capital works. It's just sometimes, or most times, the working capital changes. That's what I'm simply trying to blow for you. So you say year 1, 2, 3, 4. So we'll add one more year.
5.
So to the right. So let's call it total. Watch the way I want to do my working capital. Most lecturers will not do it like this, but watch. I feel like this one is easier for you. So let's first do it normally. So you come here, you say working. Let me just write WC. So you say working capital. So what's our working capital? So they said it's how much? 20,000, Abi?
20 million for year 0.
But we are from the beginning of the year. Good. So let's first do it normal. So 20,000 a year 1, 20,000 year 2, 20,000 year 3, 20,000 year 4. Abi? So what's the inflation? What's the percent for the inflation?
Yeah. Okay, 3%.
3%.
So you said 3. 3. 3. 3. Yeah, what's our incremental working capital?
2,600.
2,600. Next one.
21,218.
21,218. Third one.
21,855.
Hold on. Sorry. There's already a mistake somewhere. Hold on. Please, let's keep muted. Sorry, I just noticed a mistake somewhere. Please, whenever we are doing working capital, don't forget that this initial outlay, when was this initial, for you to even say initial outlay, what year was this 20,000 first introduced?
0.
Yes, 0.
So this should be raised power 0. Sorry. This should be raised power 0. It was introduced in year 0 and not year 1. The first one is an initial outlay. So it's year 0. It was first initially. That's what I'm working about. What yes, there's nothing actually like year 0. But what we used to represent year 0 is we are saying now that's the year of investment currently. And in the question, it simply states that when the investment was made, somebody should read that grammar for me again, please. That line of working capital of that 20 million. Sorry.
And an additional initial investment of 20 million naira would be needed for working capital.
Investment. So what it means that when you are actually putting your first money, your first initial investment, you need another addition. So, and that means it is the year of investment. Year of investment is now. I've told you, whenever you hear now, you hear currently, you hear immediately, it means year 0. It means as of today. So that's what we are using this year 0. So that initial investment, the first one was made in year 0. This one was made in year 1. This one is in year 2. This one is in year 3. So this one I should have had 20,000. Interest power 0 is 1 now.
Yes.
I should have had 2,600. So this one would have
21,8.
21, 21, 8. Okay, 4.
21,
21,
855.
854.
8, 5. Like this, Abby?
21, 855.
5, 5.
855.
Good. Now, please hold on with the question. Please just hold on with it. Now let's now do something. You know, I've told you based on my explanation, I told you that whatever you record or whatever you do for working capital is just the differences that you remove. It's not the whole figure that you take to your stuff. Because while we are recording the differences, don't forget that my example I told you now. For year 0, you put let's use our vintage account, so we put 600,000. Then at the next year now, we now need 400. So we now put 400. We put 400. So the difference there now is 200,000. Then at the end of the year, we recoup how much? Let's say we recoup 800. So 800 minus 600, that is 200. So what I'm saying is just the differences that will be what? That will be recorded. So for this one, now let's say differences. This is my differences. You can come out. Let me now say differences in working capital. The first year 0 is still going to be the same. This first one is 20,000 that you are, because you know this one you are putting it. What I'm saying is this is there was nothing before this one. Are you understanding my grammar? This is year 0 now. Was there a year that you want to compare with this one?
No, sir.
So there was nothing in year 0 before now. There was nothing before this year. This is the year of investment. So it will still be the same thing. And your working capital is you are spending it. Don't forget what I told you. You are using it for operation. So it's going to be a negative sign. So what I'm saying is, so you do something like this. So you say 20,000 first. So from here now you can start, because now you now have something in year 2 that you can use to compare this one. You have minus 600.
Minus 618.
Minus 618.
Minus 637.
637. So what once you're not done with this one now, what Joe? So once you're not done with this one, I'll show you. So now do like this. What's the total of everything? Don't forget, everything must be recouped at the end of everything is recouped at the end of the year. So what this means is at the end of the project, you must collect all your working capital back. It will not come as an inflow. Listen to me, listen to me. Working capital, don't forget, I told you that at the beginning of the year, we invested 600,000. At the end of the year, we collected 200. Don't forget, I see out of that, they now said, okay, no, sorry, we invested 600, we collected 400, Abi. Then the year 2, they now say, okay, we need 200. You know, see out of that 400 that we are removing 200 for them. Abi.
Yes.
Yes, sir.
It's still out of that 400,000 that you have with you that you are removing 200 for them. The next year, they say they need another 150. It's still out of the remaining 200. So it's still a working capital. It's just the money that is moving. Then at the end of the project, we are not working again. No, project is done at the end of the year. After the whole project, we will now collect our whole money back. But we will not collect our whole money back. But for this particular one now, all the money that you are collecting back cannot happen at year 4, because year 4, there is still investment. But year 4, there is still investment. So it will not happen what? It will not happen the next year. That's why working capital most likely always used to fall to the next year. You did project year 1, you did project year 2, year 3, year 4, you still use the working capital. So it is when, okay, we finished at the end of year 4, year 4 is done. So the next year now, we will now collect all our money back, and it will come in as what? As an inflow. It was the addition of everything together.
21,855.
21,855.
Positive.
Now. So this is where you now this is what you will now do that is different from what most lecturers will do in class. So you now come here and ask for something relevant years. So what it means is this relevant years like this. I'm sure most of you should understand how it is going to fall in your book. But for me, let me just explain it to you so you know that once you do this relevant years, just know that this is the way you are going to carry it to your book directly like this. So watch out. This 20,000, when did we invest it?
Yes, sir.
Year 0. This one is year 1, year 2, year 3, then year 4. Abi. So this is the way this is going. This is the way this is going to your book. Like this is doing. So don't at some point, maybe after this incremental sales, just stop looking at this year. After this incremental sales, don't really care about this years again. So this was invested in year 0, this was invested in year 1, this was invested in year 2, year 3. Then at the end of the total year, at the end of the total investment, this is when you collect your total. Please, Ejo, show you. So you means, do you understand? Is there any question on working capital? I'm taking my time on it too.
So how do you get that 600?
Which one be 600 again?
Under
that was 2600 minus 20,000. We're doing differences between this and this.
Okay.
Michelle, now what is your question? Benjamin Chuku, your question, please. Oh yeah, fast.
Okay, sir. Please, I want to know
that working capital.
Why?
I know how I've seen the differentials.
Benjamin, I'm listening to you, please. Please hold on, madam.
Why?
Please hold on, madam. Mr. Benjamin, you're talking first.
Okay, so I want to understand why the 20,000 was cut across the whole 4 years, but the question said it was introduced at the beginning. I don't know if you get my question.
Why the 20,000 is?
Yes, from the question they said 20 million was introduced, but here in the working we spread it across the 4 years. I don't know if you understand.
That why is this like?
So
why is this spread? Why didn't you just put it for
1 year? 1 year, yes. Why do we have to spread it across the 4 years? This 20
that's
million.
what I'm telling you now. Working capital. You cannot just introduce working capital now. You can introduce working capital. Yes, you obviously introduce, but it is a movement of money now. Movement of money in, like, look, let's use my example. So what I'm saying is, let's assume for vintage accounts, we put 600,000 the way we put for this year. Does it stop there? Next year, there's still project next year now. Does that mean we will not put anything again? I don't know if I'm making sense. So this 20,000 is introduced at the beginning of the year, fine. But working capital continues now. Do you know that for that initial outlay, when we do our initial outlay, that we only leave that at year 0 because that's the initial. Let's say I want to buy a land. Listen, I want to buy land. I just paid 2 million naira. Next year, would that 2 million naira move out of the person's pocket? It will not move now. No. But let's say after I buy the land, every year I used to pay maybe people that would cut the grass, people that would I don't know, anything. I used to pay them every year. That's my working capital. I'm just using that as an example. That's my working capital. And I put 200,000 in the, and I give my agent 200,000. Okay, this 200,000. Okay, land might not work, because you might need to recoup money. But when you buy land, there's nothing you are recouping. But just follow the scenario. And I give my agent 200,000. Okay, every year be paying these people 50,000. Do you understand? Maybe I now pay. Okay, let's say the land I'm even using it to rent self. Listen, the land I'm using it to people that used to come and do event canopy. I'm using it to rent. So I now give my agent that, okay, take this 500,000, be cutting the land every year. So it takes out of 500,000 out of the first year. 500,000, I've invested it. I've invested that 500,000. So the first year, I pay them 200,000. The business bring back a lot of money, but out of it for working capital. What working capital bring back for us? That we are assuming that there will be a lot of sales now, but I just assume okay, this is the amount working capital is bringing for us. Working capital is bringing 1 million naira. We invested 500,000. But what we have left now is 500,000. Next year, we'll put that 500,000 again. So what I'm saying is there's movement. Working capital is true at the end of the project. That is why. But initial outlay, whatever it is, the money that you pay for land once is not moving. That's why initial outlay is always only in year 0. But this working capital, there's constant use of it. That's why you need to fill up the whole year. But it's 20,000 across the board because there has not been inflation on it. It's just assuming it's 20,000 throughout the year of the project before inflation came in. I don't know if that makes sense.
Yeah, it does. Thank you very much.
Thank you. Agbe, please, your question. Laptop is low. Okay, I go inside. Agbe, please, your question.
Yes, I don't know how they got this. How you got this 618 and 637.
Differences now: 2,600 minus 20,000, 21,218 minus 2,600, 21,855 minus.
Okay, thank you, sir. Okay.
Please, is there any other question on working capital?
Please, sorry, how comes about the output, please?
I didn't get that.
I mean the output. How do we ascertain this output?
The output is the question now. Is it not this output you're talking about? 2070, 125?
Yes, sir.
Then the question. When the question, I think it was just it was like 20,000, 70,000. Abi, am I even correct? I should be.
Yes.
It was like 20,000, 70,000, 125,000, but we are raising up to 1,000 here now. That's why we just so 20, so that the figures don't get too big. If I write 20,000, I'll be having million here, and it will be, the bigger the number, the bigger the mistake. I mean, the bigger the probability of making mistake.
Thank you, sir.
I hope that is fine. So, class, please give me. Let me see. I will not take time. Just give me 1 minute. Let me go inside so I can plug this system, because if not, it will die. I will not finish this question. That's not bad. I do not want to. One of my brothers, one of my younger nephews, and these three people, one of my younger nephews is writing ATS. The boy is lazy, eh? It is one. If you read 1 hour like this, you will see you don't tire. I see her. Oh, that is just in ATS one. They just start. Never even know what you want to do.
He's gymming him. He's gymming him for the future. Let him start with 1 hour. By the time you enter ATS 2 hours, ATS 3 hours. Skills, he will start reading 8 hours. Professional 9 hours. He's building stamina. That's why.
All those boys are just, all this new generation. They're just lazy. When I was in skills, I was telling him they look like, say, maybe this man they make mouth. Like there was like when I was in skills, particularly, I was reading no mouth. I was actually reading 10 hours. There was one time somebody came to tap me on my seat. Like I would sit down on a stretch and read 8 to 10 hours, like on the seat. There was one time somebody came to meet me and said, "Come, do you used to take drugs? Like, are you sure you're fine?" I'm like, I didn't. I was like, you've not, like, because I used to go to my center to read. I did my ICANN in Port Harcourt. Like I used to go to my center to read. You used to take drugs. You've not stood up from this seat since morning. I said, I mean, no, waiting pursue me now. We pursue me come up from Ibadan, come Port Harcourt. They say I should stand up. Okay, now I die here. I rather die here. Reading does not used to kill now. I'll have terrible headache when I'm done. But at that time, me and paracetamol. I feel like I abused those things at some point because I'm a headache one injure me. So I think I'm settled now. So let's continue, please. Let's still know the rotate like this. Yeah. Don't break my leg. Please hold on. I'm not used to staying inside for instance. Yeah. I'm finally settled. Yeah, Mr. Tunde, please ask me if I start with taxation.
Good evening, sir. My question is this: on the sales, are we multiplying our output by that incremental figure?
Are we multiplying
our output with the incremental figure?
Yes, sir.
To get our total sales.
Yes, sir.
Thank you, sir. On the fixed cost, sir, our
Yes, sir.
incremental is 10,500. Are we still going to multiply by our output also?
No, I explained that.
Can you recap?
What I said was incremental, like fixed cost does not deal with output now.
Okay,
fixed cost
sir.
does not move with the level of output.
Okay.
So it does not have anything to do with output. Fixed cost, if you look, the figures are always, that's why it's big now. This 10 million naira.
Okay.
That is why. The
Okay,
figure is like a whole figure.
Thank you, sir.
You're welcome. So let's do our tax. So let's say tax. I don't think we're able to solve 2 questions today. But this is working, so we've not even solved the question. Let's say tax saved on capital allowance. Is it good that we're going to solve that second question assignment? It's good like that. make I rest. So say table 1, 2, 3, 4. Come on, this one go big go. Let me say 4 by leave it like this first. And then the other one hard. So you see here. You can see here. You say item. See cost. And you see tax saved. So let's start with this. So let's say here 0. What's our cost?
120 million.
We are getting to the power of 1,000 now, so 120,000. Come on, write it here. So now let's not start. So this is our first cost. So let's say you say now say year 1. Let's say year 1, you say capital allowance. This CA starts for capital allowance. What did we agree our percentage as?
30%.
25%. 25%.
How did you get 25?
100 divided by 4 years.
100 divided by 4 years. So when it's reducing balance, you divide 100. 100 is constant. Divide 100 by the number of years. You get your percentage. So yeah, what's that? What's this? 25% of 120,000 is what?
30 million. 30.
1,000. Stop saying million.
Sorry, sir.
So you now say. So what's this? Our tax sitting down value. So our tax sitting down value
90.
is what?
90,000.
90,000. So now we'll not do here too. This is why this question always comes out in number 1. This one is even one of the simplest one. No? This is why it always comes. Imagine this one that has cost of capital with it. Imagine how many hours. It always takes time. So question 2. Number 2. So you say capital allowance. This one is muted. And I'm echoing 25%. So what's 25% of 90,000?
22,500.
22,500. This is here to let me add about. Oh no, let me add about 4 more. We see insert below. Can see one of extras. So now our tax sitting down value now.
It's 67,500.
67,500. Yeah, kilo no? Yeah, 3. So you see your capital allowance again at
16,875.
16,875.
No.
16,875.
16,875. So our tax sitting down value.
5625.
60.
5625.
625.
So capital allowance, Abi?
Yeah.
1 yes. Bro. People noise to go to tax class. It's sure for me. So you now come here, now say sales proceeds. Yeah?
Okay.
What's our sales proceeds?
20.
10
10.
million.
10 million.
10,000.
10,000. Sorry.
So what do I have? Balancing allowance or balancing charge?
Balancing allowance.
Why?
It's balancing charge.
We're done. Why?
Tax written down value is greater than.
It's greater than sales proceeds. So that is what? Balancing charge, Abi?
Yes.
Allowance, balancing allowance.
Allowance, balancing allowance.
Madam, And you are saying the yes with crazy composure and assurance. Please, whenever your tax isn't down value is greater than your sales process, please balancing allowance and it is a taxable profit. I beg. So what is my balancing allowance figure?
46 to
46 to 5. We are not done. No. Now I told you that this is just what we just calculated. This is just for tax. So what we just done is what would I say it? This is just capital allowance. That's what we do in taxation.
Capital allowance.
And that's not what we need. We need tax saved. We need tax saved on capital allowance is what we need. And our tax save is 30%. So what you will now do now, so you'll now be saying 30% of all this capital allowance, tax saved on capital. How much was the tax that we save on this capital allowance? Listen, this capital allowance, this is the normal capital allowance. Now, what SFM is not saying that, now calculate the tax that you saved. Not the total capital allowance, the amount of tax Congo that you saved on that capital allowance. So you're not saying 30% on the capital allowance, 30%. What's 30% of this? 30% is the tax rate, is the tax rate in the question. So what's 30% of this?
9,000.
30% of this.
6,750.
6,007 what?
6,750.
750.
This one go.
5,063.
This one go. Yeah.
To 188.
1,188.
12,188.
Please, it's because it's balancing allowance. Balancing allowance is a taxable profit. If it was balancing charge, it would have been a taxable loss. Don't forget to. Do you understand what I said? Balancing allowance is a taxable profit. It's a profit. If it was balancing charge, it would have been in negative. Yeah, I don't tire. Oh yeah, let's not gonna come to our solution. Now let's go and solve. We've not solved before. It's now I want to solve. So we use about 2 hours or 1 hour for working it. We're done. Let me see if I can copy this thing. I know really get things like that. Please, just copy. I beg. Oh. Please now, I beg. Help me. Help me, please. Don't scatter. Don't scatter. Don't scatter. Don't scatter. 18 be this. Oh. People said it's very hard. Oh yeah. How many years do we have? We have 4 years now. You should answer me now. Yeah, 0, 1, 2. Are you there?
Yes.
We are here.
Yes, we are here. Can you guys hear me?
Yes.
Yes.
Sir.
Okay. Let's see. I said, how many years do we have?
We have 4
4
years.
years.
Plus the extra 1, 5. So year. Don't know what's on lower end here. Let's cut that. So we have year 0, 1, 2, 3, 4. Year 0, 1, 2, 3, 4. We have an extra one. Oh, God of mercy. What am I doing? Year 0, 1, 2, 3, 4, 5. Okay. So here we say year. Say 0, 1, 2, 3, 4. Next, so let me raise them up in thousands so that you see.
Please, an observation or a suggestion.
I'm hearing you
I
now.
think there is need for us to. I think there is need for us to add the 85 because of our tax in arrears.
When we get there now, we'll solve that.
Okay, no problem. Thank you.
So what's our sales for year 0?
It's nothing.
Year 1.
42,000.
Year 2.
169 is 20.
69. It's 20. Year 3.
231, 500.
I didn't get that to what?
231, 500.
200.
500.
Yeah, 4.
36, 460.
36, 460. Yeah, variable cost.
Costs. Dash.
Me, like sometimes, but it's mago. It's mago. Sometimes in my workings, I would have gone and subtract sales from variable cost. What I'm bringing will just be contribution. I don't really get time like that, but for the purpose of exam. Yeah.
18, 720.
18, 720.
75, 740. 143, 375. 23, 860.
It's a fixed cost.
10,500.
10,500.
Year 0. Yeah.
11,025.
11,576.
12,155.
So our profit.
Twelve 780 for the first year.
Somebody should be doing last year like that.
83,055.
For the last year, I'm getting 445.
445.
Year
Yes.
3,
Yes.
76,549.
5 what?
76,549.
So that's that. So let's now do our tax. So what is tax? How is tax charged?
In arrears, 30%.
So it means tax of year 1 will be charged in what?
Year 2.
That means we don't have tax in year 0, and we don't also have tax in year 1. So what's our tax in year 2?
3,834.
So you charge it on 12,780, have
Yeah.
Yes, sir.
So for year 3, you charge 30% on 83,055.
For the tax of year 4, 22,965. No, for year 4, no, is year 3 on I calculated. I will go to year 4.
Year 2, year 3.
24,917. Year 2 is 24,917. 24,917.
For year 5 will now be 13134.
Please, are we fine?
Yes.
So now let's go. Tax savings from capital allowance. What are those figures we got?
9,000.
Okay.
Is that one going to be from year 1?
It's for year 2, sir.
Why, ma? Why?
Because tax is being done in arrears, so the capital allowance, I think, I don't know, sure.
You need to be very confident. I just kept it there. I wanted somebody to speak up.
9,000.
You charge capital allowance the way tax is charged. If tax is charged in the same year, you charge capital allowance in that same year. If tax is charged in arrears, you charge capital allowance in arrears also. So
6,750.
6,750. 5063.
63.
And 12,188.
12,188.
12,188. Yeah. I don't tire. Yeah. Initial outlay.
120 million.
Initial
120,000.
20. Working capital.
20.
20,000. 600. 618. 637.
Madam, wait first. Now I think they even write working capital.
Okay.
See, in some books, this is not the way it's arranged. Some people can put scrap value first. Some people can put, it does not really matter as long as you know what you're doing. Just don't forget anyone. 20,000. Year one.
600.
600. Year two.
618.
618.
618.
Year three.
637.
Eh?
637.
637.
Year four.
That's 21,855 positive. 21,855 positive.
855. What's the that we've not added? Are we done?
Scrap value.
Scrap value. You come here, you see scrap value. Where do you say we add it?
At the end of year 4.
That's when we sold the project.
Positive 10,000.
Sorry. Positive 10,000. What's remaining?
That was all.
Discount factor. Real money cost of capital.
Yeah, our cash flow.
Let us now see our net cash flow.
140,000 negative.
Do this. Go work. And there put so this one is 140,000 negative, have you?
Yes.
140. Please, somebody should be helping us, please.
The next one is 12,180.
12,180.
The next one is 87,603.
7,603.
The next one is 57,746.
746.
The last one is 12,054.
12 what?
54.
Fourth one.
14,398.
Can I now see
discount
factor at 7.8 percent. What's the one at 7.8%?
Sorry, sir, please. Are we not going to convert that rate to money?
We are going to convert it. I want them to give me that one first now. So I will not cancel it and tell them that they are wrong. I wanted to have the form. Because most of them are already pressing calculator. I will allow that call. I wanted you to, if it's not that I spoke up, if we calculate and finish, before we now say, let's start again. Oh yeah, we'll convert this into money cost of capital, Jerry. So let's go. Let's do our calculation again. Our workings 10. So you will say okay, waiting with this. Okay, 6. So you say money cost of capital. So what's the formula we use?
1 plus real cost of capital over 1 plus I, everything into brackets minus 1.
But grammar,
1 plus real cost of capital over 1 plus inflation, then everything into brackets minus 1.
How many space? Where did you see your own awake?
Sorry, it's a mistake. It's a mixture of things.
I don't face fear. See us how. Oh yeah. So which one would I use? Abi, I'm trying to determine money cost of capital now.
Yes.
What's our real cost of capital?
7.8%.
What's our general inflation?
That's 3%.
3%.
What's my money cost of capital?
11%.
No.
11%.
One point zero zero. Huh? Zero point 0.901. This cost check. Let me know if I'm correct. Around 0.812. 0.731 or 0.6 only 654
659.
59 have you?
Yes.
Which one is 593 Lumajan? Abi?
Correct.
Actually, when you solve SFM to some point, you will know discount factor from.
Sorry, please, which one is best? Should we use it in 3 decimal places or 4 decimal places?
3 is best, please.
Okay.
The longer your decimal, the more accurate you answer. But I feel like 4 is too much. So I'll use this 2. Oh, yeah. What's my present value? I feel like the way I build this thing is not fine.
Yeah, 1097.
Hold on. Let me first check something. So I feel like the way I build this thing is not fine. It makes it look everywhere. Is it better like this? I'm gonna leave it like this.
It was okay before.
It's fine like this, sir.
So it's not okay again. It's okay like this now. That brightness just making it looks too everywhere. Yeah, present value for this one is negative 153.
Yes. 10974.
One year.
The first year.
10974.
71 134.
71 134.
42212.
Go.
42212.
42
212.
212.
9488.
94
88.
88. So 9,488.
7148.
1480.
So my net present value is what? Net present value. What's the difference between present value and net present value?
Net present value is the net of everything.
Present value is the present value of everything. B.
The net is when you knock off the initial
Inflow
investment.
minus outflow.
Thank you very much.
956.
Positive or be negative?
Positive.
This is 956,000. 956.
Yeah.
How about you?
Sorry, sir.
No.
So should they go ahead with the project or not?
Yes, they should go ahead.
So please, do you have any question regarding this place with anything I did here? It's simple now, very simple, sir.
Sorry, sir.
Ask me.
Sorry, please, can you go through that money cost of capital?
Is it? What's your question here, madam? What's your question? I cannot hear you. Okay, I'll take it as there's no question. Please, do you have any question regarding what I explained, please? So we all understand it.
Yes, sir.
Maybe, probably, if we go through the solutions again, because little area of confusion is on that working capital calculation. But
Yes.
probably maybe if I go through the solution again, I don't know if it will be dropped after this class.
It is always dropped.
Okay, sir. All right.
Oh, God of mercy. So, this is the way it is going to be. So I don't think the question is done. I think they ask us to calculate written. Discounted payback period. Discounted payback period is actually so just we've gotten one. This one we've gotten is one. Just find another discount factor that will give you a negative and solve that one. Get your IRR. For the discounted payback period, what discounted payback period? The difference between discounted payback period and normal payback is the same thing. Let me show you in this book. Discounted payback period and normal payback period. You know that your normal payback period, you used to consider cash flow now. Do you understand? For your payback period, you would have used this total net cash flow. So you would have been doing 180 minus 140,000, 87 minus the balance. Do you understand? That's for net. That's for payback period. When it's discounted payback period, you will not use cash flow. You will use your present value. Somebody's unmuted. Please mute your mic, I beg. When it comes to discounted payback period, instead of using your normal cash flow, you now use present value. It's discounted now after you've discounted. So you do 1097 minus this one, whatever you get, 71 minus that, this minus whatever you get your discounted payback period. So after you've done the three, you will now advise based on each and every, based on all of them. So you now advise based on all of them. So you do IRR also. Then you make your, what are the assumptions you made during this calculation? So you would say the assumptions you made also. That's the assignment. And another assignment, please attempt question, let me see. Yeah, attempt this question. Yeah, attempt this question. What's the name? Question, this Babado. Even last night I gave it as an assignment. This question is very funny. Please attempt this assignment. But there's question regarding cost of capital there. So please use 12% to discount. Please write it down. Nobody should be asking me later. Use 12% to discount. So you don't need to solve the cost of capital. Just use 12% to discount. But cost of capital is very, very easy. So what they're asking here is a project-specific cost of capital. So what project-specific cost of capital is just saying is, this one has to do with maybe you are trying to go into a new line of business. First of all, before I even go there, we have two types of risk. We have what we call a business risk and what we call financial risk. So now let's assume I want to go into a new business. Now, what I'm into accounting software. So let's say I want to start manufacturing trophy. Trophy is beer or Gouda. Let's say I want to start manufacturing beer now. You know, I don't have any line, I don't have anything there. So now, how would I now know the cost of capital to it? I cannot use my present cost of capital because I'm into accounting software. This is not the same cost of capital that will be using in manufacturing of all those beers and all now. So what you now do is you look for a proxy company. There's something we call a proxy company. So proxy companies are like companies that are already in the business. So I'm going to look at Trophy. I will look at people that used to take beer. Tell me their names now. Mr. Isaiah.
Henneke.
We have
Good.
Star, we have Henneken, we have Legend, we have Gouda, and
Now woman they call this name.
You have all those Port Harcourt, Calabar.
See the back.
Now them they drink all those things. So what I'm saying is you will now go and look for a proxy company. So Henneken, all those Euro and all them. So you're not going to their proxy company because they're already in the business. So you now use their, because something assets better. Or you go and use their cost of capital. Don't let me go to assets better. You go and use their cost of capital. Now you cannot use their cost of capital directly. Listen, you cannot use their cost of capital directly. Why? Don't forget I said two things earlier. I said we have something we call business risk. I have something we call financial risk. I'm already even teaching cost of capital. Business risk is just a risk that if I go into beer production, I might not make sales. I might not sell very well. That's me. That's a business risk. Risk don't necessarily even sell. My variable cost might be very high. Just normal risk of the business. Say okay, my cost might increase, my salary, just normal cost of just operations of the business. That's what business risk is saying. And business risk is usually measured with something we call asset beta. We call it asset beta. Asset beta measures business risk. Asset beta measures business risk. They will now have what we call financial risk. Financial risk is the risk that if I leave accounting software and go and do beer, my capital structure will change. My capital structure will change in the terminology or in the sense that maybe if I want to go, I don't have enough money. I most likely go and collect more, go and take more debts or go and take debts. or I will introduce even more capital for my pocket. So it's obviously my capital, my debt structure or my capital structure would change. That's what financial risk is saying, that the risk of me going to borrow more money or the risk of me investing more money. So that is a financial risk. And financial risk and business risk together, they are measured with what we call equity beta. And that is why your equity beta is always greater than your assets beta. Because equity beta consists of two. It consists of financial risk and business risk. While asset beta consists of only business risk. So your equity beta is always greater than your asset beta. Now, let me go to the cost of capital part. Now, so the first step, like I said, is you first look for a proxy company. So once you see a proxy company, you now take the proxy company's asset beta. You will take their assets beta. So once you take the assets beta, so you look at the asset beta, okay. So the asset beta means that you are just taking their business risk first. Taking their business risk first. So once you take the asset beta now, okay, sorry, you take the equity beta, not asset beta. Sorry, you take the equity beta first, no asset beta, please. If you go to the account sheet, so you take the equity beta if they have equity beta, because you are looking at both the business risk and the financial risk. So you take the equity beta. So once you take the equity beta now, the first step in project specific cost of capital, the first step is you will now ungear. Hey, I've never heard gear and ungear before. Voila. You will now ungear that equity beta.
Equity beta.
You are ungearing the equity beta to remove the debt factor. You know, I told you that equity beta consists of debt and equity. So you are ungearing. Whenever you hear ungear, gear means something as debt. Whenever you hear gear. Some people say gear, it's not gear. Gear. Whenever you hear gear means something as debt. It is geared, it is debted, it has debt. So whenever you ungear it, you are removing the debt factor or the debt element. So the first thing is you now ungear that equity beta to remove the debt, factor of it. So what you now have, once you now remove debt, what do you now have? You now have asset beta. And asset beta does not have debt. First of all, you pick the equity beta and you now ungear. So once you ungear, you now have asset beta. That asset beta you now have. Asset beta is what we use for APV. When we get to APV, we'll solve that. For asset beta is just APV. For APV, it's just asset beta, because asset beta, APV does not believe in debt. Anyways, when we get there, we'll solve that one. So you now regear that thing to get your asset beta. In your CAPM formula, your CAPM formula is CAPM equals to your cost of equity plus equity beta, open bracket, RM minus RF, is equity beta that is there. So what it's saying is that, but what you have now is asset beta. So you now need to regear. There's formula to ungear, there's formula to regear. So you now regear back to your what? To your equity beta. You're now regearing back now to now, you are going to a new business now. The first thing you pick is, listen, the first information you pick is your proxy company. It's your proxy company equity beta you pick. So whenever you are on game, you use all the info. Person say now more. Wahala. So whenever you are on game, you use the proxy company's information because you are picking their equity beta now. So you use only their information. So that you've on gear now, you now regear. So again, you now use your own company's information, because what you are trying to do now is, what you have now is just business risk. So you're not trying to say, okay, if my own capital structure is also changing, you now incorporate, or you now also, how would I say it? You now account for your own debt structure also, for your own debt. So that is, you now convert that your asset beta now to equity beta. So once you now have your equity beta, that equity beta that you're now going to put in your CAPM formula. Once you now put that equity beta in the CAPM formula, you now get your what? You get your cost of equity. All those things is just determine cost of equity alone. See how this part of icon syllabus. God, I beg you. So all these things just to determine cost of equity. So once you now get your cost of equity, some questions, if your examiner wants to be very wicked, he will not give you cost of debt also. If your examiner wants to be very wicked, he will not give it to you abstractly. So he will give you information that you can go and use to do bond valuation. Don't forget. So bond valuation, you're not going to use IRR. So once you now use IRR, you now use IRR to determine the cost of debt and your yield. That's like your yield to maturity. So once you now say, once that done cost of debt, you now put everything in your WACC formula. Your WACC formula is your cost of equity equals to equity plus debt plus preference shares. We can live on a. So anyways, you're not gonna put in your work formula. All these things is just to determine your discount factor. So if examiner wants to be wicked, they will put that's why it's always number one. So they will not give you cost of capital question work like that. So they will not put investment appraiser under. So they don't tell you that you should go and discount with that cost of capital you got in number one. What I used to tell my students, if you don't solve the cost of capital, if you know solve, when you get to number two, go and assume any cost of capital. That put it under assumption. I assumed 12% to be cost of capital. It's not that you now leave the entire question. If you don't get number one, the cost of capital, go to number two, go and solve. You will now say, as I assume that particular cost of capital. I'm just saying a lot of comments. And I don't talk before. And I know people do not talk before. It's not so. Please, no, don't do it in my assignment. No, don't do it. Your head does scatter. Don't do it in the assignment. The assignment, just I already told you to discount with 12%. Just discount with 12%. But do the normal MPV. Businesses is measured with asset and better. Yeah, ask me. You not plan to ask me question before. Now they ask me. These questions are getting too much. Yeah, Benjamin, ask me.
Sir, please, can you retake that discounted payback period again, please? Oh, sorry about that.
I said that, normally when you do your payback period, I use cash flow. For this one, you're using your present value. You've done payback period before now. So just do, but you use your present value this time, not cash flow. Oh, that's fine. Tunde Adeoti, please, your question.
Good evening, sir.
Good evening.
My question is a request, sir.
Request?
Yes, my request is this. I
request don't finish. I don't exhaust them.
I want you to listen to my request. Now, there's something I want to beg you to do for us. Number one is this.
You even get number.
Let me get number. See, sir, I want you to take cost of capital and project specific cost of capital. Those are the two things I request from you.
Who should take it?
You find a way to take us.
Me.
I'll be honest with you. I'm having problem. I attend a study center. Under that project specific cost of capital, after the proceed company, the asset beta, the financial risk and the business risk, that aspect, I'm always confused. I don't get that aspect very well. From the way you explain it this night.
It doesn't make sense.
I cannot hear you anymore. Don't disappear. I think his network is gone. Abis my own. Can you guys hear me?
Yes.
We can hear
Yes, we can hear you, sir.
Yes,
Okay,
we
so
can hear you.
So I think it's his network. Anyways, while he's coming, I don't know. I cannot answer his request as he never finished here. So anybody wants to tell me anything?
Sir, please, are you with me?
I'm with you.
The explanation you gave about discounted payback period, I don't know if you could come back to that solution and then just retake the explanation you take earlier, please.
That's exactly what I said now. I mean, what did I say again? I think I just told you to use
coming
present
back
value.
to the solution site.
You've done payback period in class now. Were you in that class? Before I know if you
Yes, I was in
stress me
class.
or not.
No, I was in class.
Oh, yeah. So what's the problem?
No, you explained something as in the column we'll use. You said we'll use the.
And now you will subtract this thing from this thing. Now you subtract 10,974 from 140,000. Whatever is remaining, you will subtract. That's normal. We will do payback. Now you subtract this one from what is remaining until you get to the last one. So once we do the last one, the shy way we used to do it, we will now do whatever is remaining divided by this for the number of years.
All right. Okay. Thank you.
You can watch the payback period class. I cannot exactly explain the figures as I don't know the answer. That's I cannot. But I know you will subtract 1097 from 140, whatever is remaining. Subtract 71,134 from it until you are not left with anything again, something like that. Let me see if I have any
Thank you
solution.
very much. It's okay now. Thank you.
I'm not even solve it yourself. I've been so I've not explained payback period at all. Oh, that's crazy. Okay, see what I'm saying. So for the first year, year zero, you have 200, 200. And after you have 80 minus 200, you have 120. You do 20 minus 120. Abi, what am I saying? 200, 200. So you do 80 minus 200. Yes, you have 120. You do 20 minus. So you have, so at some point, you don't have anything. You just divide it. So you say 20 minus 66 to get the number of years. I don't know if I wait till they talk, they make sense. Yeah. 200, 200, 120. So you subtract 120 from 200, you have 80. You now subtract 60. You subtract the cash flow from the balance. 200 from 200, you have 120. So 120 from 200, you now have 80. 60 from 80, you have 20. You now do 20 divided by 60 for the last step. Oh, share something like that.
Sir, please, you've tried. Thank you. Go and rest.
Thank you very much, sir. Ẹ ṣé, sir.
Yeah,
Ẹ ṣé
God
púpọ̀ o.
bless you, Bishop.
Miss Juliet, you're trying to tell me something. Okay, Juliet, I'm listening to you.
No, sir, it was an error.
Oh, okay. So, please attempt that particular question. That's the remaining part of the question. Attempt this. Please don't even attempt. Do it new. Do this question by yourself. That question, what's the name? Babadon. That one I wrote assignment. Please solve it also. Let me tell you guys something about investment appraisal. This thing we solved in class. Don't let it stay long before you solve it yourself. Today is Wednesday. Before Friday. If not, you'll be looking for figures where figures did not lost to. You find figure under your bed, you know now we got it. So don't let it take too long. And don't do eye contact. Don't do eye contact. It's not that you carry your book and you carry your phone, or you just carry your phone after I send the soft copy. You just using your eye to look at it. Okay, this is what he did here. Okay, multiply. Okay, divided. Okay. You will now close it. I don't get you. You would used to do eye contact. You will not close it. You will now say you don't sabia. I've bet money with somebody before, a very smart person. The person was third best overall in our foundation. So that's how smart he was, best overall in Nigeria. So I told him that this eye contact that you do, you guys, you do it for, come and do it for this SFI. You will not look at it. You will not close it. Come and solve that thing if you will get it. He tried it 4 times or 5 times. I chop him money because he will not get it. Because there are some things that just looking at your eye, you feel like it makes sense. But if you don't carry Bible and calculator, you know, go just make sense again. That's just the way it works. You know, go just gel again. How did they get this thing? What did they put here? What did they put in this first place? How did they put this one here? You know, go me. So that's why I always tell people, this question we've done, you can look at it. Okay, this was what they did here. Look, okay. Now close the book. Now carry only the question. Carry your Bible, carry your paper, maybe your book, A4 paper preferably, and calculator. Now start from workings. Now be reading the question like you are sending for the first time. Now start solving. You go hook. You have not solved. It's not as if you solved it yesterday. This one that I'm solving for you, I solved the last diet. I think I solved the diet before. Okay, no, last diet was the first time I used this math. I solved the last diet, and I solved it for some private students, for my revision students. But what I'm saying is that's why it's easier for me. That's why I always know when I make mistakes. But for people, this is the first time you are solving it, so you know go jail. So you make mistake, you go hook. So if you can't hook, you will not open your book back. Okay, understand what they did. Close it again. Continue. That is the only way you can learn. So after you've now solved that number one, now stand up, go and eat, shower, relax. After 1 hour, now come back. Now attempt that assignment. That assignment, you go still hook. Yes, now. You go still hook again. After you can hook for that assignment, you will not carry that first one and try to compare. But you go come still hook and you will not now still get the answer. I will now come to class on Monday. I will now do correction. That's the way this is going to work. I'm very sure. But anyways, thank you guys very much for listening. I think it has been a wonderful class. I think we achieved. Instead of canceling the class, I think we have actually achieved that. If we finish this Monday, I can do that revision and I'll most likely solve 1 or 2 more questions then we'll move on. Your cost of you put that I should take cost of capital. I don't know, but I don't think I would, because we already shared the cost. It will not be fair for me to just take you up. Anyways, but I would. But he said the classes will hold maybe Monday. I don't know. He's just saying maybe we'll take you guys this week or next week. What I will try as much as possible to be. I will try as much as possible to be in that class. So if I'm in that class, if I see the way it's going, then I can decide what to do with it. Because I'm the lead SFM lecturer, and my only joy is if everybody understands what is taught, if everybody pass. So that is the only way that can work. Anyways, on that note, thank you guys very much. If you have any question, I'm not even taking any question. Make I go sleep. Thank you very much. Have a wonderful night rest, and I will see you maybe Monday, inshallah. Good
God
night.
bless you too. Thank you, sir. Good night.
Good night,
Good night.
sir.
God bless you.
Bless you. Thank you, sir. Good night, sir.
Good night.
Good night, sir.
Some of now good night, no, they good night again. Just more cost of capital. You don't